Good morning, friends. We are on chapter number 9 of account part 2, that is accounts of non trading concern. In this video lecture, we are going to talk about the classification of income. Friends, basically, classification of income is of two types, that is, income are classified in two categories. One is capital income, another is revenue income. Capital incomes are those income which are not much regular in nature, and revenue incomes are regular in nature. Capital incomes are recorded in balance sheet at liability side, and revenue incomes are recorded at credit side of income and expenditure account. Revenue incomes are closed and transferred to the income and expenditure account, where capital incomes are carried forward in balance sheet. Let us talk about them in detail. Accounts of non-trading concern and the classification of incomes of non-trading concern is our topic. Classifications of incomes are of two types: capital income, which is what income of a concern which is not regular in nature, as well as the benefit of which income is available for a longer period of time is known as capital income. For example, donation received for a specific purpose, legacy, life membership fee or life subscription, loan borrowed, etc. The capital income received by non-trading concern other than borrowed, like donation, legacy, etc., are capitalized and added to the capital fund. In addition to this, the prize fund, construction fund, etc., are disclosed separately at the liability side of balance sheet. Revenue incomes of the concern which is regular in nature and are arising from the activities of concern is known as revenue income. For example, annual subscription of members, fee, interest on investment, sale of old newspapers, income of entertainment program, rent received, income of sports ground, lockers rent, rent of hall, income from amenities provided to members, aid or subsidy or grant received from government. The revenue income are disclosed at the credit side of income and expenditure account by the non-trading concern. Let us see the difference between capital income and revenue income. Point of difference: meaning capital income, the income of concern which is not regularly received, as well as the benefit of which is available to the concern for a longer period of time and which is capitalized, is known as capital income. Revenue incomes, the incomes of concern which is regularly received and arising from the activities of concern is known as revenue income. Objective: the objective of capital income is to procure long-term fund. The objective of revenue income is to procure regular income. Presentation in account: capital income is disclosed on the liability side of balance sheet, whereas revenue income are disclosed at the credit side of income and expenditure account, as discussed earlier. Balance: every year the balance of capital income is carried forward and balance of revenue income is transferred to the income and expenditure account. What could be the illustration? Capitalized legacy, donation for a specific purpose, charity income from sale of assets, etc. Subscription: let us talk about the illustrations of revenue income. Subscription, lockers rent, sale of old newspaper, rent of all, etc. So friends, this was all about the incomes of non-trading concern, which are categorized in two types: capital income and revenue income. and we have seen the meaning of both and the difference between two. In next lecture we will be talking about the classification of expenses. Thank you.